In today's video, we're going to cover what MACD is and how does it work in a trading. It's a popular indicator that I've been receiving a lot of requests for to do a video on this. So in this video, we're going to be covering the main parts of MACD and how it works. Let's get started. First thing first, please read the disclaimer below. Once done, please continue with the video. I'm hoping that you guys have read the disclaimer by now, so let's get started. So what is MACD? As you guys know, it's one of the main popular trading indicators that a lot of traders like to use under day-to-day trading. There's a way that MACD works, which I'll be explaining to you now. So basically, the MACD is a short version for the moving average convergence divergence indicator. Is one of the most commonly used indicators for technical analysis basis, and a lot of people like to use this indicator based on the signals it provides. It was developed by Gerald Appel in 1970s to help traders identify the changes and the strengths and also the direction, the momentum and the divergence in a particular stock price or in a particular Forex pair, or a particular, it could be anything like a commodity, or it could be anything like a metal, for instance gold. So you can use this indicator, but again, there's no 100% guarantee about any indicator in this life, so you will see some losses, but it can work as your probable side of things, so you can have that as an extra confidence to take your trade. So the MACD is basically a trend following momentum indicator, and how it works is it consists of two moving averages. So it takes the 26 EMA and it subtracts that from the 12 period EMA, and it gives you like a signal line, and you can also see a histogram as well, which I'll be getting into later on. And the relationship between these moving averages is quite important, and then it's based on the 26 days period of the EMA and the 12-day period of the EMA. Again, EMAs are exceptional moving averages, which I've made a video on previous, so you can go watch that as well. Again, so let's get into how does it work. So the main thing is, how does MACD work? Like I explained to you earlier, it consists of two EMAs, and then they subtract the long-term EMA, which is the 26 period EMA, from the short-term EMA, which is the 12-period EMA, to develop a signal line and to give us, to give a signal, or to give us one side of where it thinks the market is going to go next. Again, the signal line is the 9-period EMA of the MACD line. So for example, here's the signal line is the orange one, whereas the 26 EMA is that one. There's also a histogram there as well. So histogram of the MACD is basically, it's like a little graph, as you can tell. So green is obviously for buying, and the red is obviously for selling. That is negative and that's positive. Again, the histogram, it basically indicates what the price is doing. So let's just say we've got a trend that's going upwards, and the MACD line is above the signal line. The histogram will be green. If the trend is going downwards and the MACD line is below the signal line, it'll show as red. Again, we need to do a bit of practice to know how it works. There's also crossovers as well, and there's different things that we need to know with the histogram as well. And it just basically is above or below the 0.9 the histogram is, and it represents the difference between the MACD line and the signal line. And then when MACD crosses above the signal line, the histogram will turn positive, i.e. green. And when the MACD line crosses below the 0 line, so 0 line instance would be this line here, and then it'll turn red, showing that it basically will give you a negative type of reading. So that's how basically MACD works. There's also things like, I'll show it to you now. So how you interpret it is quite important. Just like any other indicators, MACD is obviously above, it has a signal line, it also has an EMA, and then it shows like a crossover. For example, here there's a death cross here showing a negative crossover. The price will be going down, and also the histogram will, as soon as it goes below the 0, and the histogram turns red, meaning that it will give you a bearish signal. On the other hand, it will, in this case scenario, we had a bullish crossover, and as soon as it crossed over the 0 line, it gives a bullish signal, meaning the histogram will be green, so meaning that we can anticipate that the price to go up. Again, we can also use this indicator for divergence as well. So let's just say that MACD is the price is making high highs, but the MACD is obviously not making the high highs, meaning that it's showing divergence. And then this could be a bearish, like a signal, a bearish divergence, indicating that the price could reverse. On the other hand, if the MACD is making lows, if the price is making lows, but the MACD is failing to make the lows, that means that this could be a bullish divergence, meaning that they will be looking to buy, and the price could the price could basically go the opposite way. Like for instance, here if I had a divergence here, and if the price was making lows and the MACD wasn't making the lows, then we will look for the price to go up, so we'll be looking for buys. Again, it also shows the overbought and oversold conditions as well, so you can use it as that as well. Some traders use MACD to as the high and the low extremes to see if the price is overbought or oversold. But again, it could only be, it's not going to be always 100% accurate, so you will need to do a lot of practice, and you will need to do a bit of back testing to see how it works for you, how it works for your strategy, and based on that you can use this indicator as an extra confidence or as a way to to buy or sell, depending on what the indicator is suggesting you. So it's quite important that we figure this out, and we make sure that we're on the right side of the market. So in this video here, I've got a screenshot of MACD that I use, and also you can do the settings for these as well. The settings quite available on TradingView, so you can select the same MACD 1226 close 9 EMA indicator. It'll be on one of the top ones. The settings are already there. You can change the color of the lines based on let's just say if you want it red, or if you want the signal line to be green, for instance, you can do that. Histogram is basically a graph, so green graph and red graph. Green is positive, the red is negative. There's a MACD blue line, which is obviously the 26 EMA, and there's also a signal line. So when there's a signal line, when the signal line crosses the EMA, it gives us a signal to buy. When it crosses the other way for the EMA, it gives us a signal to sell. So we can use this information to sell or buy, depending on what the MACD indicator is suggesting. Again, this will take you a bit of practice. This will take you a bit of you might have to go through this video again to see how it works, but that's perfectly fine. When we're learning something new, it will take us time, but eventually we'll get there. Practice will make us perfect. Knowledge will increase our probability, and we can use that to practice then, and then meaning that we can come out on the right side of the market. So this is basically a really simple indicator. It has a graph, it has a signal line, it also has an EMA, and it's basically to do with moving averages. So it's quite similar to other indicators like the RSI, etc. MACD actually will give you a signal line to let you know when to buy and when to sell, based on where the price is and what time frame you're using it on is quite important as well. So some people use it on 1 hour, 4 hours, whereas some people like to use it on smaller time frame. So again, this is something that you'll have to back test to see what works for you and what works for your strategy and what type of pair you're trading and what the volatility is and everything else. So we have to take everything in consideration, not just one thing. The MACD is telling us to buy, so we're just going to buy randomly because MACD has said it. Again, this could be quite dangerous. You could blow your account. Now, sometimes it could work, but sometimes without any basis, without any strategy, without any certain confidences that you like to trade, MACD on its own will not just do the justice, and you will have to practice and to make sure